The housing market in San Diego is continuing to soften up after we hit a peak a couple months ago. We were definitely expecting that considering mortgage rates hitting some record highs recently, at least in the last 25 years. So I'm going to be diving into a bit of the data here. This is a little bit of a departure from my normal videos with all kinds of fun B-roll of San Diego. But I thought sometimes it's nice to break this up so you can see all the information I track and you can see the trends of where things are going. So I do have my spreadsheet open here. We're going to dive in. So what you can see here this past month, we did hit $964,000 as the average home price, the median home price in San Diego. Now, as we can see, in June, we hit $1 million, which was the high over a year before. We'd gone through a 15% correction, came back to $1 million. So we recovered everything, kind of bounced around, hit $1,025,000, and it's starting to soften up now, $999,000, $964,000. So we're off about 6% from our high water mark back in August of 2023. Now, when we look at the square footage, the price per square foot sold, it's more about 2%, 2.5% roughly. So just a little bit of a softening right now. However, mortgage rates did hit 8% a couple weeks ago, about 3 weeks ago. And so that certainly is having an impact. And we'll probably see a greater softening of home prices in the November data that will come out in mid-December. So we'll take a look at that next month and see where things are at. But it's certainly things softened up a bit with those 8% interest rates. Fortunately, interest rates are coming back down right now, sitting just under 7.4%. So we've certainly gained some ground back there, which is awesome. But as we can see, if we look at what we call the final sales to list price, so I'll make myself a little bit smaller here so you can see a little bit more. So the final sales to list price is what the home was listed for and then ultimately what it sold for. So if it's over 100%, obviously homes were on average selling for greater than list price. If it's under, then it's selling for less than list price. A balanced market is considered 98% of list price. So if all the homes listed, if all of them average 98%, that's considered a balanced market, not favoring buyers or sellers. Above that, 9,900 plus percent tends to favor sellers. Below that, really favoring buyers. So we've really been kind of a balance plus market for a bit. But as we can see, starting in March, and then April, and then May, and everything started ticking up into June. Then we started to see a bit of a tipping point. Things started to come back down with the final sales to list price at 101%, coming down from 101.5. And we started, it said 102, so started to see it fall off. And what I see when that happens is that home prices start to come down a month or two later. That's very consistent, and we're seeing that now. So we'll probably see continued final sales to list price, kind of probably in the 98, 97% range, a little bit more softening of home prices in the next few months to come. Now, a lot of experts really do believe, we'll see, that mortgage rates will fall middle of next year. If that happens, be prepared for home prices to start picking up again and likely for bidding wars to start again. I don't see that anytime in the near future, but potentially as we head into the spring, summer selling season of 2024, we might see some of those bidding wars come back if mortgages drop. So we'll see if mortgage interest rates drop. We'll see. The Fed has been holding steady on their rates. That is not a direct reflection of mortgage rates. It's a little bit different. It's more having to do with bonds and 10-year treasury. So we'll see how that all plays out. But right now, what we're seeing is certainly a softening. And what that means for buyers, if you're looking to buy a home, is that you're able to negotiate a lot more with sellers on selling their home, picking up credits for interest rate buy downs. It's going to help out your actual mortgage payment if you can do interest rate buy downs, getting credits back from the sellers to help you do that, or negotiating repairs, that kind of thing. So if you're a buyer right now, I really actually don't like saying that it's a great time to buy, it's a great time to sell, because you hear every realtor saying that. I think it depends on your unique situation. Now, what I will say is that if you are looking to buy a home and you can afford the payments right now with the higher interest rates, inventory has been climbing over the past several months. As you can see here, this is the total inventory of homes for single family homes. We were very, very low at 1,500 homes at one point. Now we're at over 4,000 homes. So inventory is climbing, about 3.5 months supply of homes. Overall, sitting around 6,000 right here, 6,000 homes available. So there's a fair amount of homes available out there. Still relatively low considering how large of a county San Diego is with over 3 million people. But if you can buy a home, there's a lot of selection right now for you. Not a whole lot of competition, likely not going to get into bidding wars, and you can negotiate with sellers. If mortgage rates come down and you purchase now, then you can refinance down into that lower rate and save yourself hundreds a month on your monthly payment. Worst case scenario, if you can afford it now and mortgage rates rise, well, you're still locked in because you have the mortgage rate that you can afford. So if that's you and you can afford it, a lot of opportunity to buy right now, a lot of selection, and a lot of room for negotiation. If you are looking to sell a home, then we really got to take a really hard look at your